Hey everyone, welcome back to our news trading session number two. And obviously, today is going to be our theory and practice. So, there's going to be a lot to talk about. And, if you guys are wondering what's going on, Bank of England just announced their interest rate cut live as we speak right now. All right. If you guys are asking about what the market is going to be, we will take a look at it later, but it's more in the context of us uh, talking about the theories and then practicing the strategies to trade the news. All right. So this is not a live market analysis. This is not a live trading session. This is going to be our news trading session number two, which is our theory and practice. Okay. So let's just get started. My name is Vera Injera and welcome to our session. Just a quick disclaimer, any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. So be very attentive when determining the volume of your transactions and consider all possible risk factors. Okay. So as per usual, I'm going to show you the code to double your deposit, which is the 100% deposit bonus. And I'll show you the code in a minute. And then you should already have access to the private Telegram channel if you have attended our news trading sessions before. If not, you registered through the website. You should be receiving it through the email. If you didn't register through the website and you're not part of the Telegram group, please contact the Octa customer service. I'll be more than happy to help you out with the link to join the Telegram channel. Okay, so this is the code. It's non-farm 2024. It is still valid until the 31st of December 2024. So you have about 2 months to use the code. Okay, so again, the code is non-farm 2024. And obviously, we are going to be talking about news, right? And we'll talk more about what's going on this week. There's a lot happening, and there'll be more happening in about 7 hours' time as well. So yeah, it's good to come in and join the theory session so you can actually look at the market conditions before you put all this strategy into practice. Okay. All right, just a little bit about myself. My name is Vera Injero, and I've been a full-time trader for over 20 years. And I've also been a professional trading coach since 2007. I've worked as a technical analyst for some global forex brokers out there in America, in Australia, as well as in Japan. I'm actually based in Australia, and that's where my career is. And I'm also an expert in Ichimoku Kinko Hyo technique, which is a Japanese charting techniques. And I've also been invited as a guest speaker at Trading and Investing Expo across Australia, Invest Fair in Singapore, as well as the ATAA and the APTA conferences. Okay. All right. So what are we going to be covering tonight? We will talk about the advantages and disadvantages of news trading. And we'll also take a look at the most profitable news for trading. We just had that period of profitable news for trading kind of yesterday and 2 days ago. We'll also want to discuss the three main phases of price movement, some general rules for news trading, and then we'll take a look at some of the examples of pending orders. We will talk about the buy stop and the sell stop strategy. We will also talk about the buy limit and the sell limit strategy. And then, there's several news today, so we will cover that as we speak tonight. I think because of the time shift with the daylight savings in the U.S., we will not be doing the initial jobless claims today. In this hour, it will be released in about an hour and a half's time. Okay. All right. So let's talk about the advantages and disadvantages of news trading first. There's a lot to talk about, especially with the market movement this week. For you guys are probably not aware of what's really going on or what's driving the market. You should watch the weekly outlook because that's where I discuss all the fundamentals that's going to be released. What are the news or events that could have a huge impact into the market. Okay. But yeah, let's talk about the advantages first. All the necessary information can actually be found in the economic calendar, so there's no need to delve deeply into technical and fundamental analysis. Now, this is true because when we talk about news trading, it's not really fundamental analysis. Fundamental analysis goes a lot deeper than just news trading. But if you are wondering, where can I find this economic calendar, you can actually go to Octa's website. There is actually a section there for your economic calendars. There's also a few other sources out there. You can use investing.com. You can go to forexfactory.com if you want to. Personally, I like to use Trading Economics. This one here has a lot of information that we can actually digest, from those news releases. Okay, so yeah, again, if you come to news trading, you don't really need to have the know-how in terms of technical analysis. If you're just there to trade the news on breakouts, we typically do our buy stops and sell stop strategies during our NFP numbers as well as the CPI numbers. We had our NFP last week, that was on the 1st, and we will have our CPI live trade that's going to be next week on Wednesday. That would be on the 13th of November 2024. All right. Now, the other advantages is that the events and the calendars are ranked in order of importance, which helps in making adequate decisions. And the reason you need to understand, this impact level, because not all news are created equal. Some of the news have a huge impact into the market. They could move the market, and some news, they just don't move the market at all. And when we talk about news trading, it's also good to kind of understand a little bit about, what those news releases. Earlier I said you don't need to delve deeply into technical and fundamental analysis. Doesn't mean that you should ignore the basic know-how of a fundamental analysis. At the very least, you should understand what those releases are for. Otherwise, you don't understand the context of what the market is looking out for. Okay. Publication of statistical reports noticeably increases volatility, allowing traders to potentially earn significant profit. Now, if you open up your sterling chart right now, you can do anything on the pound USD, sterling yen. There is some sort of volatility going on right now, right? It moves the market. If you have been looking at the market at the wrong time, it doesn't move. Sometimes it just doesn't move, right? For example, on the pound USD, typically what we find, pound USD and the Euro USD, typically what we find is during the Asian session, it is going to be a very thin trading. It's going to be a very quiet market for those European majors, right? But the Asian market, it's good if you're trading the Australian dollar, if you're trading the Japanese yen. They have a lot more activity, there's a lot more liquidity, there's a lot more volatility as well. And as a trader, we always look for this volatility because, I think a lot of traders out there, especially day traders, right? They don't really want to stay too long in the market. They want to get in and they want to get out as quickly as they can. Therefore, they require that short-term burst of volatility in the market. Otherwise, the market is just not going to go anywhere. Okay, so this increase of volatility, it allows traders to potentially earn significant profits because the market moves, and if you get it right, it does move a lot, very quickly. If you get it right, it'll go in your favor, obviously. Okay. The other advantages here that we want to talk about is the simplicity of the trading strategy for news trading. You basically need to have the know-how to open and close the position. If you are here watching this, then I would assume you know how to click a buy and sell. I'm going to teach you how to use the pending orders tonight. So we're not just, relying on market orders. We want to plan out our trades. Sometimes we want to step away from the computer, but it's going to be a news release soon. We want to be able to place these buy stop and sell stop orders, okay? Or the limit orders as well, okay? So this is easy, right? Because with the news trading strategy that we have, it's pretty simple, especially with the buy stop and the sell stop strategy. All we need to do is just to be able to gauge the market. What we want to talk about today is what are the market conditions for you to be able to use this strategy, okay? Now, the last advantage that we have here is that there is minimal time expenditure on your trading. You know exactly when to access the trading platform, what actions to take because you already have the schedule of when these news releases are going to be. Okay, so the trading process itself, again, as I said, with pending orders, it's very simple. It can be completed in just a few minutes. I do that in less than a minute. I can do 4 or 5 currencies in less than a minute. That's basically what we do. But as you have a lot more experience, as you get used to it, it can be really quick in terms of setting up these orders. Okay, now let's talk about the disadvantages. There are going to be huge disadvantages in the market. Okay, number one, the market situation doesn't always develop as predicted, with the consensus by logical thinking and common sense. Now let me ask you this question: if you have ever traded the news, right, and then you were looking at the consensus, you kind of know, okay, if the number is bad, we typically sell that currency away, right? But sometimes we have that lower consensus and the market kind of shoot back up. Now, let me give you an example. The example that we have here was our NFP trade this month, okay? We had a really negative growth or negative gain in the NFP number. In fact, it was actually 100,109 to be specific, below the consensus that the market has. And the expectation for this, if you kind of just jump in and say, okay, I don't want to understand the context, I look at the consensus, the number is way below the consensus, I should be selling the US dollar. Now, the question is that we had last Friday, we don't really have that question because I already explained what's to be expected. But for those that are not familiar with news trading, you'll probably start selling the US dollar. You start buying the euro, you start buying the pound, and instead of the market going up in your favor, it kind of reverses back down. And that's against the logical thinking. The trick here is that with any news trading, this is the reason why I say you kind of need to have a little bit of a fundamental knowledge. Because if you don't have the fundamental knowledge, you don't understand the context, you don't know what to expect from the market, and sometimes market has already been pricing in that consensus, sometimes it's underpricing in the consensus. If it's really a huge surprise to the market, it could have a huge impact, right? So just to explain a little bit, last week we have that lower gain in the NFP. However, the market was already pricing in, or at least anticipating, that the number for the NFP gains last month was actually going to be lower because there was the hurricane in the US, and then there was some strikes ongoing in the US as well. So they were kind of anticipating that the number might actually be lower. So it's not really a surprise. That's number one, right? So market is already anticipating that the number could be bad. And then we have the unemployment rate. It was stable at 4.1%. That's already a good enough answer for anyone looking at the US economy, that the unemployment rate doesn't go up. So we actually have kind of a mixed data last week. And in addition to that, there was that Trump trade, i.e. market was anticipating that Trump won the presidential race, which he did. We have a huge movement in the market when when everyone is tallying the vote. In fact, we saw the market moving when 15% of the vote has been counted in, and Trump was actually leading the way significantly. He was actually ahead by 70-80% compared to what Kamala Harris was. Okay, so that's one disadvantage. At least you have to understand the context, or at least join our trading session so I get to be able to tell you what's the context, what are we expecting, or at least watch the weekly market outlook where I kind of explain what are we really anticipating this week. Okay. Now, disadvantage number two, again, not all news can cause significant market reaction. Sometimes we're not looking for that news, okay? And for example, last week, in terms of the NFE number and the unemployment rate, could it be a huge impact? It could be a huge impact. Typically, it was a huge impact. However, we already know, and market has already been pricing in, for the FOMC to start cutting interest rate this month. Last week's number was just a confirmation that the FOMC is likely going to cut today by 25 basis points, okay? So it doesn't cause a huge impact into the market. Sometimes we're not looking at the CPI numbers. For example, this month, it's probably not that important to look at the CPI numbers yet. Likely wouldn't see a huge impact into the market, okay? So again, if you're looking at a low impact data, for example, we had uh, the U.S. distillery number, which is the oil supply number. If you're not trading oil, it probably wouldn't have a huge impact. Sometimes even if we are trading oil, it doesn't it move the market that much if it doesn't go beyond the consensus by a significant margin. Okay. Now the last one, and I want you to understand this very carefully, because a lot of places will tell you that, oh yeah, niche trading is good. You can make a lot of profits out of it. I'm going to tell you the other side of the coin. If you're not able to accurately anticipate the market direction or analyze the situation incorrectly, you may experience significant losses. In fact, I've coached thousands of traders, and I would say about 70% of beginner traders that jump in and don't want to learn about the market before trading the news, they get wiped out. And I think a lot of new traders, typically they get lucky in the first month, and then the second month they kind of probably blew up their account. The reason why is because they were thinking about getting rich really quickly, so they kind of over leveraged their position, and it doesn't take long for the market to move against your position if you get it wrong. So just a quick note here that you always need to understand your position sizing and never underestimate how the market could be. Okay. So you can use it to your advantage. News trading can be helpful to you if you understand the strategy behind it. If you don't understand how to trade news, it's always good to learn how to trade this news. Okay. Okay, so let's talk about the most profitable news for trading here. We basically look at two categories of news. They can be hot news or unexpected news, including terrorist attack, military conflicts, natural disasters, and I can add in the presidential election as well. The reason is we don't really know where the election is actually going to be. And if you remember, on my outlook this week, on Monday, we actually saw the US dollar weaken significantly compared to last week's Friday. And the reason for that is over the weekend, we had a little bit of an information that Kamala Harris was actually gaining on the polls. Okay. So it kind of threw a little bit of a wrench into the wheel there that a lot of traders were already anticipating for Trump to actually win the race. In fact, I would probably say that the US election, going into the US election, we were about 50-50, okay? And we didn't see any signs of market volatility until about 50% of the vote was counted in. And that was very early, all right? 15% is a very small percentage, to kind of make a call that, one candidate is going to win the race. And I would probably say it was unexpected. And in terms of what the unexpected news was during the election, is that the Democrats actually lost a lot of their territories. Okay, they lost it to Republicans, and the stats was for Kamala compared even to Biden, she was actually underperforming. That was the unexpected news, and it causes a lot of volatility that you saw, right? We had to wait probably about 24 hours before Kamala kind of concedes the election there. But the day before that, 12, 13 hours before that, we already figure out who actually won the race. It was just a matter of when, not if, in terms of Trump winning the race. Okay? Now, that's the unexpected news that we can talk about this week. The periodic news are the news that comes out on a regular schedule, right? Central bank meetings, like the Bank of England just now, at the start of the hour. We got the monetary policy decisions by the Bank of England, and then in about 6-7 hours time, we are expecting the FOMC to announce their monetary policy, which they're likely going to be cutting interest rates by 25 basis points. Is that going to be a surprise today? If the FOMC decides to cut by 50 basis points, then yeah, it will actually be a huge surprise. Now, the other huge surprise for tonight would be the FOMC not cutting interest rates. This could happen. There's a small percentage of traders out there thinking about this happening because of Trump winning the presidential race. Because once he starts his fiscal policy with all the tariffs that he wants to introduce and the rate tax cut from 21% to 15%, it could actually push inflation up. So we don't know what the comments is from the FOMC. Is JP going to comment on the Trump victory, or are they just going to keep quiet? That's the one equation that we're not able to solve as of yet. Okay. And then we also have the other numbers, like the GDP numbers, the monthly, the quarterly, the yearly GDP numbers, inflation numbers. We got the CPI next week and the PPI next week. And we have the ISM manufacturing PMIs. We got the ISM services PMIs, unemployment numbers, labor data that was released last week. Right? We know when this is going to be released because we already have a schedule ahead of time when they're actually going to be released. Okay. All right, so let's talk about the main phases of price movement. And you need to understand why we put it in such a way that we call it accumulation, participation, and distribution. When you look at the market moving in a sideways market condition, this is usually an accumulation phase where the market actually takes a pause and retail traders are confused about where the trend is going to be. However, the smart money or the big funds, they know what they're doing. And they're actually accumulating positions there because of the information that they have, because they pay a lot of money to have a lot of analysts to kind of track down or at least anticipate where the market is actually going. So they have that resources. Okay, they're able to access the trading terminal like Bloomberg or Icon, right? So obviously they have the advantage because compared to retail traders, it costs a lot of money to have all this. Okay, so the most informed and forward-thinking insiders enter here. So people that know the know-how of the market, people that are experienced in the market, they will look at the accumulation phase where the market is moving in a sideways market condition, and they actually start planning ahead. And the reason why we call it accumulation, because for these big funds to have their orders filled, I think in the forex market it's okay, it's pretty quick. But if it's not a retail forex market, for example, if it's a futures market or, for example, the stock market, they would actually need to accumulate their positions because they're not able to kind of fill all of their contract size in one go. Okay, and this is the reason why we call it accumulation, because it takes time for all these orders to be filled, and that causes the sideways market movement that we have here. So that's accumulation. Participation phase is basically where a lot of retail traders starts coming in. Okay, if you're trading and you've been following a live trade and whatnot, then you will be in the participation phase, which is typically where the technically driven traders enter because they know how to use the trend lines, they know how to read the price action in the market, they know when a breakout is happening, and they get in during that breakout. That's participation. All right. And then the last phase is actually where we saw a strong rally, right? And this is actually the distribution phase. So this is where people that are uninformed starts coming into the trade because maybe their friends call them up and say, hey, maybe you should be buying gold, you should be buying oil, you should be buying the US dollar, when the market has already been running up rallying up really high, okay? So they get in at the last phase, and the reason why we call this distribution, because the big funds that came in during the accumulation phase or start collecting their positions during the accumulation phase starts getting out of from their position during the distribution phase, right? Because if they want to sell, there's a lot of buyers to pick up their orders, and they get out during the distribution phase. So if you are an informed trader and you look at the rally that happens during the distribution phase, you might want to be a little bit more on a careful side because market could reverse at any given moment. Okay, so those are the three main phases of the market, and this is different from saying, oh yeah, it's sideways, uptrend, downtrend. It's different. Those are the market structures. These are the phases. So you need to understand these phases on top of the market structure for you to actually be able to trade the news. Okay, because when we trade the news, we want to be in the accumulation phase or at least be in the participation phase. We don't want to be in that distribution phase, okay? So if the news is released, we want to act quickly as you can within the first 5 minutes, okay? It's ideal to be able to be there and have a position or at least an order open during news releases. But we are not able to react quickly unless you're trading just one asset. Then yeah, you could probably trade that manually. But if we look at all these breakouts that happens pretty much at around the same time during news releases, we want to have the pending orders to help out with the reaction. Okay. All right. Again, accumulation, participation, and distribution phase. Now, couple of general rules before we start talking about the pending orders. For news trading, you need to be able to study the market and analyze the dynamics of a currency pair or the instrument that you're trading. What I'm trying to say here is you need to at the very least, you need to understand whatever you're trading, right? You need to be able to understand how they move, what moves them, okay? What is the typical range? If there's a news release, how far can it go? How quickly can it go? Can it go 100 pips? Maybe it'll just go to about 25 to 50 pips. Let's say you compare the dollar Canadian to the dollar yen, right? The dollar yen at the same time can run up 100 pips easy, but in the dollar Canadian, having it run 50, 75 pips, that's already a significant move for that currency pair. So you need to understand the dynamics of whatever you're trading. Okay. Now, number two, you need to be able to be quick in terms of assessing the reaction of a currency pair or the instrument to the latest news. For example, last week's NFP, if within the first 50 minutes, um, we had a gold position last week on Friday, and within the first 50 minutes, if it doesn't react quickly, we need to kind of get out of the trade. So you need to be able to measure, get the feel of it, and understand when to actually say, all right, something is wrong with the trading strategy, market is not moving in our favor really quickly. It's best to just get out of that position as quickly as you're able to reassess the situation, okay? All right. You also need to prepare for trading by marking relevant levels on the chart. As time goes by, this period of time where you need to be able to mark out your relevant levels, it goes shorter, all right? But ideally for new traders, I would say, 1 hour before the news is released, I want you to get into the position, all right? I need you to start looking at the market and start marking out where are the key levels so you can actually kind of do your pending orders as quickly as you can before the news, as close as possible to the news release. I like to do that 5 minutes, at the very least, 5 minutes. Sorry, at the most 5 minutes. Beyond 5 minutes, let's say 10 minutes to the news, I'm not opening my orders yet. I'll place my orders 5 minutes into the news. Okay. All right. You also need to decide on your trading tactics, including when to open and close the order. You would also need to choose an appropriate trading time frame. So if you're a scalper, there's no point for you looking at the daily time frame, okay? Because you don't go that far. If you're just scalping the market, you need to be able to get in and you need to be able to get out as quickly as you can. For scalping the market, the most that you can go is actually 50 minutes. Even going to the hourly time frame, sometimes it's no longer relevant if you're just scalping the market, okay? But if you're more of, I don't really want to scalp the market, as long as I'm able to close the position within the day, typically a lot of traders focus on the hourly time frame. In fact, the hourly time frame and the daily time frame, these two are the most favored time frames by traders because it has that balance there, okay? All right. You would also need to determine the maximum risk for each order and consider using stop loss or trading stops, okay? So when we talk about maximum risk for each order, you got a couple of options. If you open up with a huge lot, typically your stop loss needs to be tight because if you have it too big, too wide, it could actually wipe out your account. So you need to do that in relation to your equity levels. If you don't have a lot of funds, don't open huge positions during news trading. Okay, again, as a reminder, this is not a get rich quick scheme. All right, trading is it's a skill, it's an art, it is a career if you want to make it to be. All right, but it's not it's not a casino. So don't. Okay, just don't. If you have the thought that you're going to get rich really quickly by doing news trading, it will probably do you a lot of mental damage in the long run. Okay? All right. Decide on the terms of the deal, whether it'll actually be a quick trade or is it going to be a long-term trade lasting more than an hour, for example. Typically for our news trading session, our live trading session, I try to get out as quickly as I can. If I can get out within the first 1 minute, and that's typically what we do, I would get out. If I can get out in the first 5 minutes after the news is released, I will get out. Right? Um, really plan out what are you trying to do. Are you just trying to take advantage of the short-term volatility? If you are, then get in and get out as quickly as you can as the trade allows you. Okay, don't overstay in your position, don't get greedy. Typically it doesn't end well, so just a very quick reminder. Okay, all right, so let's talk about the pending orders first. We have 4 pending orders and just 4. You can screenshot this slide if you want, and have it printed out, have it posted on your wall or something like that. Turn it into a poster. Just make sure that you have this as a note, okay? Because I can tell you, times are different, right? When I first started trading, we don't have internet speeds like this. I was actually one of the pioneers during the webinar. If you want to look it up, I go all the way back. But yeah, back then we don't have webinars. We don't have, expert traders telling you, okay, this is how you should be trading the market, teaching you how to look at the market. We just don't have that. We read books and that's it. Or we find mentors in the industry, which is not going to be easy. And this is probably going to be out of reach for, probably 95% of traders out there. Okay. So it take me about a year to kind of get used to this pending order. So I don't expect you to get used to it quickly, but the more you practice, it's just a much quicker way to be able to familiarize yourself with the 4 different pending orders. Now, let's talk about the stop orders first. I know it's called weird, right? It's called stop, all right? But buy stop and sell stop is actually for use in a breakout scenario, right? Buy stop, for example, are order placed above the current market price and you expect price to continue to rise up beyond the stop orders. Okay, what we're doing here is basically we look at a resistance level and we expect price to break this resistance and run up to the upside really quickly. If that's your view, then you want to use a buy stop. You use the sell stop if you look at a support level and you expect that level to be broken once price touches it, then you want to use the sell stop so that you are in that sell position when we have that volatility or that rally or that drop in the market. Okay, those are the stop orders, and this is the reason why we use the stop orders during our live trading session, because it's actually the easiest strategy that you can learn. Okay, it's pretty mindless, I can tell you that. Okay, there are some requirements for that, and that's the reason why we talk about the market phases, because if you don't understand the market phases, you might use the stop orders incorrectly, and that could cost you a lot of damage. Okay, so again, the buy stop, if you're expecting a resistance to be broken, you want to trade that breakout to the upside, you use the buy stop. Sell stop, if you expect the floor to be broken and you expect market to continue crashing down, you use the sell stop. Okay, that's very easy. Now the limit orders are a little bit different. Now consider this, before I tell you what it is. With the buy stop, we are expecting a breakout scenario. All right, so we expect the resistance or the support to be useless when the news is released. The limit orders are the opposite. When we look at a certain resistance in the market, we anticipate that level to be a strong level that might not be broken, then we use a limit order. So the limit order, the sell limit, is an order placed above the current market price and you expect price to fall down once it touches that limit orders. Okay, the buy limit is the opposite. Market goes down, you expect a support to hold, so you want to create a buy limit. Once price touches that support, you want to be in that position to buy. There are advantages to using the limit orders. They're a little bit more complex, and this is probably not suitable for new traders. Okay, but If you have the technical know-how, you understand price action, you understand market structure, this could be a huge advantage. The reason is you are opening your position very close or very near to support and resistance level, i.e. your stop loss, it's going to be so small, okay? Your risk is going to be minimal. Typically with a limit orders, your risk to reward ratio is crazy. It's beyond 1 to 2 in terms of risk to reward ratio. Okay? But it's not as mindless as the stop orders. You need to understand market structure. You need to be able to read the price action. You need to be able to identify a key level in the market that could actually hold further movements. Okay? If you're not able to do that, don't use limit orders. The reason is if you don't understand what you're doing and you do the limit orders, it's going against the trend. It's basically opening up a position that's going against the market trend. Okay? So it's trying to predict where the top is. You're trying to predict where the floor is. It could be very dangerous. I mean, there's a saying in the market here when we say, doing this, going against the trend, when we expect, oh, maybe that's a low, maybe that's a high, it's like catching a falling knife. You'll likely get stabbed, okay? So, Albert, you already know how to trade it. I spent Tuesday with you on how to trade the election, okay? So feel free to look back into that. And I already know that, you have that know-how, okay? All right, so let's focus on the strategy for tonight. We'll talk about the buy stop and the sell stop strategy first. We want the market to be in the consolidation phase. We want the market to be in that accumulation phase. If you don't see the market in that consolidation, you don't see the market in that accumulation phase, move away, move on, right? You're not able to trade with the buy stop and the sell stop. If you don't see the market go in a range bound market condition like you see on the chart here. The reason is we need that corridor of volatility. At least we need to be able to measure the range. We need to be able to measure how volatile it was before the news. If it's stuck at a certain range, then we can anticipate a breakout scenario because we know that it was in the accumulation phase, okay? So what we want to see is we want to see the range and we want to have the buy stop above that range. We want to have the sell stop below that range. So we want to be able to gauge the market. We want to know what is the corridor of volatility. Okay? Once you have that, you have your orders placed in. That's it. You step away, you move away. When the news is released, and if there's a significant volatility that can move the market, it will hit either one of the buy stop or the sell stop. Now, once one of the order has been triggered, for example here, the buy trade has been triggered, the buy stop has been triggered, you need to close the other orders, right? Because you kind of anticipate where the market is going to go. So you cage the floor, you cage the roof. For example, this one here, market shoots through the roof. You need to cancel your sell orders because you only have one position. The news typically goes in one position. If you have that other position, if there's a whipsaw in the market, it could trigger your buy stop, reverses, trigger your sell stop, and then go in the initial direction. So just be mindful of that. So with this one here, once the buy stop has been triggered, set your take profit level, set your stop loss, and leave it be. And the advantage to this, trading this during volatility, high volatility, is that market moves away quickly from your entry positions, where you can actually move your stop loss to break even. So just in case if the market reverses back, you're actually in a risk-free trade because you move your position to your entry level, you're moving your stop loss to your break-even position. Once it hits the stop loss, it'll actually be zero. You're not actually risking too much, right? So ideally, if you're not familiar with setting up your stop losses, if you know how to, you don't move your stop loss really quickly like this. But if you don't know how your risk management is going to be, if the market is in favor and you started moving away from your entry position, you would want to move your stop loss to break even as quickly as you can if you don't know what kind of risk you're facing. Okay? So that's how simple the buy stop and the sell stop strategy is. So let's go do some practice. In the market here, obviously we had a couple of news releases. All right. For example, here this is the pound USD, and let me clear out some of the fib levels here. We don't need that anymore. Okay, so let's take a look at this. And on the context that we're looking at this, I know we had a news release just now, but we were not really able to kind of do the stop orders just now. And the reason being is there is no corridor of volatility. Market was already trending to the downside before the news is released. And when the news is released, it kind of breaks to the upside, but it never exceeded the resistance that we have here. And that resistance there, right now, it is prime at about 1.2945. So there was no corridor of volatility. We're not able to trade with the stop orders or the buy stop or the sell stop orders. Okay. However, if I assume that okay, I'm doing this in preparation for the FOMC, for example. I don't know how this is actually going to develop in the next 6 or 7 hours. But if in the next 6 or 7 hours the market moves in a range bound market condition like this, we might have our corridor of volatility. Therefore, you can have your buy stop above that and your sell stop below this level there. Okay. But there are no news releases, at least not until about 45 minutes. Okay. All right, so we could do that, but we just don't see that corridor of volatility. So I'm actually going to cancel the stop orders for this one. So we'll look at other currencies. The Euro USD, do we have that corridor of volatility? If we go onto the 50-minute time frame, we might have that corridor of volatility. We might. But as you can see, it's probably not ideal. And the reason is market is already moving in a channel to the upside. It's not moving flat, right? In fact, if we try to cage it with the range before, it's basically this one here, and market is already above that range. So it's not ideal if you look at it on a 50-minute time frame. Again, part of this is looking at the time frame, right? But let's say if you're looking at this on the 5-minute time frame, we actually do have a new corridor of volatility. So if you're trying to scalp the market here, we actually have a new corridor of volatility, which is this, right? So right now, if there's actually going to be a news release soon, you could have your buy stop up here because we have that corridor of volatility a little bit higher maybe, right? And the sell stop just below that range there, okay? You can do that. Anytime you see a range bound market condition, whether or not it's actually going to be a news being released, typically you can look at that and say, okay, I'm just waiting for the breakout strategy if you want to. That's the advantage of the buy stop and the sell stop. And the other advantage here is, once I set this order, I could go have my dinner right now and I'll be fine. Because even if I turn off the computer, the order is in the system, right? You move away, market hits that level, you're not looking at the computer, you're not opening up the trading platform, it will still fill the order because the order has gone through to the broker side and they say, okay, for this account, there's a pending order at this price level. If it moves there, please open the position. So it's nice, right? You don't need to be in front of your computer 24/7 with a pending order. So I think that's a major advantage here. Okay. So that's how we look at the buy stop and the sell stop strategies. Okay. Also, just for a comparison here, we were looking at a range bound market condition before the election kind of breaks down. Right, we were looking at a very specific range, especially on the Euro USD. It was kind of moving up a little bit, but at the very least, we do have a little bit of corridor volatility, at least about 5 hours into before the election. Right, we have this small range here. You can take a look at that. It does have that corridor volatility. That small range, if I go into the 50-minute time frame or even on the 5-minute time frame, it is actually. Sorry, I need to turn this off, and so we can go back and show you that there was actually a corridor of volatility in that area there, right? You can see how the market is just in a range bound market condition right before the election result or the election poll starts coming in. So we can actually trade the breakout scenario. So if Albert was asking, how do we trade that, you already have the answers. You can use the buy stop, you can use the sell stop if you want to. It is a news release. We don't know what the result is, so it's never wrong as long as we have that corridor of volatility. Just as an example, okay? All right, move on. What about the limit strategies? There's actually a very good example that's ongoing right now in the market. So the limit strategy is, if we take a look at the order block, for example, and looking at the previous high, at least you're able to form a conclusion that yes, there is a resistance there. That resistance might hold, right? So I want to sell when price comes back to that level and fails that resistance. That would be your sell limit. So this is what happens if you have that sell limit. Market spikes to the upside, hit your order, and then immediately reverses to the downside. Now take a look at the stop loss here. The stop loss, it's so small. Look at the potential gain that you have here. The sell trade, the sell limit that was triggered, the stop loss, because we open near resistance, your stop loss wouldn't be too far away from that resistance, right? Because if that resistance was broken, then we will have a breakout to the upside. So our stop loss is typically very close to the resistance level. Your stop loss, if you do the limit orders, I think this is a major advantage. If you can utilize it to your advantage, if you know the know-how, you can use that. It will provide you with the best risk reward ratio. It will minimize the risk so much because you're opening your positions near resistance, you're opening your positions near support. And even though it is prone to failure, even though it's, as I say, it was like catching a falling knife, your risk is so small that when it hits, you'll probably say, you know what, it doesn't matter because it's such a small risk for such a huge gain in the market. And I think that's the way we need to look at the limit strategies. A lot of traders are actually afraid of using the limit strategy. I think one of the limitations, I know the name says limit, and I just say limitation, no pun intended. Um, it scares a lot of people because people probably say, I'm not quite sure about this resistance level. I'm not quite sure about that support level. What could happen? It might open up my position and then immediately hit my stop loss. That might be one thought that you guys have. That might be one reservation. That might be one limitation to use these strategies. But I would say going forward, once you attended this session tonight, you should look at the limit orders and say, yeah, if I'm able to create that limit orders, my risk is so small, it's probably insignificant. All right, I could fail 3-4 times, and it will probably be less than having a risk to reward ratio that's probably 1-to-1. Your stop loss here, we're looking at this, and your stop loss, it's about 5-10 pips. That's nothing, right? You should compare it to a position that you open normally, when market has already retraced 38.2%. You will be away from the position. Your stop loss could be about 40-50 pips. That's already 4-5 times the risk that you're taking here. So I think that should be the optics going forward if you want to use and learn how to use the limit strategy. Okay? All right. So let's do some practice. Let's find some limit strategies in the market, especially post-election. I think there's going to be a lot of levels that we can take a look at. So this is on the Euro USD, for example, right? And for the Euro USD, is there a particular level that we are looking at right now, right? Let me clear this out. I don't need that. I don't need that. Now, let's highlight what is a significant support. We're looking at this level there as a significant support, right? Let's drag this across, and there we go. We are actually at that order block. That was the previous support, and this has been resistance for the market during the election, and today it's also there. So one strategy here, you could place a limit order, right, up there with anticipation that the market could hit that resistance and fail. And I think it's worth it. The reason is, take a look at this. Where's that key level? We're looking at about maybe 1.0785, 90, 1.0790. I think that's about the right level there. Okay, and I can do this and I say, where's my stop loss going to be? Because I think that's a key level, right? So my stop loss wouldn't be too far. Maybe my stop loss is going to be at 1.0810. Where's my take profit? My take profit, I'm looking at the lower end here. You know, we're looking at 1.0680. 1.0680. Take a look at that. You see what I'm trying to say here? Your risk is just this. This is your risk. Now, how big is that risk? If we take a look at this, it's about 20 pips, right? But take a look at the potential gain if you're right and that level becomes a resistance tonight. Your potential gain is 108 pips. That is 1 to 5 risk to reward ratio. All right, take that in mind. You're risking 20 pips for a potential gain of 5 times that risk. I think it's a worthy trade. All right. What do you have to lose with 20 pips? You know, if you do your lot size correctly, it shouldn't have a huge impact into your equity. All right. The next one that we're looking at, gold. I don't think we have anything on gold. We actually don't have any significant order block that we're looking at. The order block that we might look at, it's probably way up here, right? It's way too far. So you could have the limit order up there, but you know, judging by the movement here, if price gets to that level, I don't think it's probably worth it, because by right, if we take a look at the retracement here, it will come in at about 78.6%. That's, you know, it could fail there, but it's way too far from where we are right now. We'll come back to this maybe tomorrow, but probably not today. Okay. All right. Pound USD right now, we have that range, right? We have 1.2950. What is 1.2950? Is there anything significant there? Well, there's a couple of levels to look out. That was that gap there. And if we extend that gap, this is basically where we are. That was also the previous floor in the market for the pound USD. So maybe right now we might look at this and say, yeah, this is at 1.2950. You know, what if it fails at 1.2950? Or what if it comes back to, you know, a higher level, 1.030, because we have that range at 1.3 to 1.3050 as our anticipated resistance, which is about there, right? What if we have our limit order up top? You know, maybe we want to see this correct itself a little bit higher. We might have that limit order. If you understand Fibonacci, we might look at a Fibonacci and say, okay, what are we looking at here? Maybe it might fail at 61.8%. Is 61.8% important? Well, that was where price was stuck here. So it could be important, right? We might look at that and say, oh, could be 61.8%. It might find resistance there. You know, it could be a limit order. Okay, so there are opportunities in the market if you know what you're looking at. Okay, I think the Euro USD, it's, you know, it's viable. It's only 20 pips. You know, I think that's something that we can play out in the next 30 minutes or so. We don't know. Okay. All right. So you can also trade after the news is released. But again, typically after the news is released, you need to be a little bit more on the careful side. You need to bring in your technical know-how. You need to bring in your fundamental know-how. You know, you typically are not able to trade that early volatility during news release. Okay. All right. So I think we should have time for a quick test. You know, let's do a quick test. All news can be divided into 2 categories. What are they, and what is one example that we are looking at this week? And what type of orders is actually most often used in news trading? And by now, what type of pending orders do you know? You should know 4 pending orders. This one I'll answer it for you. You should know the buy stop. You should know the sell stop. You should know the buy limit, and you should know about the sell limit. And when should each be used in trading? If you don't know, and the market is actually in a consolidation phase, it's in a range bound market condition, it's prone to breaking out. You use the buy stop and you use the sell stop orders. But if the market is not in a condition where it's actually in an accumulation phase, it's ideal to look at the limit order strategies, because you're anticipating where market could actually fail, where market could actually bounce. And again, the advantage here is that your stop loss, your risk is going to be so small, you will typically have a risk to reward ratio that's greater than 1 to 2. Typically, we are looking at maybe even 1 to 5, 1 to 4. You know, that's very normal. And again, the higher that risk to reward ratio is, the more optimum your trades are going to be. Okay? All right, any questions? Any answers for this? All right, I'll answer this then. So, all news can be divided into two categories. There can be the unexpected news or they can be the scheduled news. And some of the unexpected news that goes into this week is that we were going into the election, the US election, about 50-50. We don't really know who the clear winner is until the first hour of, the poll counts. Now, what type of orders is most often used in news trading? Typically, the buy stop and the sell stop orders are actually used a lot more during news releases because traders are anticipating more of a breakout scenario. We want to see a sudden jerk a sudden jolt in one direction, right? Okay, so this is the code again. If you want to use the codes, I think someone is asking what is the promo code. The promo code is non-farm 2024. So you can use this and it's valid until the 31st of December 2024. Okay, so again, the code is non-farm 2024. All right, any questions before we wrap up for today? Any questions regarding what we discussed tonight? Don't start asking questions about the market because we're not doing our live trading sessions here right now. This is more of a theory and a practice sessions. Anything that you want to ask regarding the strategies that we have, or anything about the theories that we covered tonight? No? No questions? All right. If there are no questions, then we'll wrap it up for tonight. So what's next? News trading or the inflation trade, that's going to be on the 13th of November. That's next Wednesday. So we will talk about what inflation is, what is the CPI, what are we looking at, what's the context, what's the consensus, what are the several scenarios that we might have. And we will do our live CPI trade halfway into our live trading sessions next week when the news is being released. We'll cover that live. Again, that would be on Wednesday next week on the 13th. Just remember, it is not the same time as always, depending on your region. It might shift 1 hour beyond now, okay? So whatever time you're doing for this session, push that back an hour. That will be our CPI session for next week. Okay, I think the schedule on the website needs to be fixed, but I'll inform the team and we'll have that sorted out for you. At least for the next 6 months, we will be on a different schedule. Okay. All right. I want to ask about market sentiment, but we'll keep it until the next meeting. Sure, no problem. Okay, looks like that's the end of our session for tonight. Good luck with your trades this week. Again, the FOMC is going to release their monetary policy decision in about 6 hours' time. In about half an hour's time, you will have your weekly unemployment claims. So just be mindful, there's still going to be more volatility in the market. And we're still looking at the market, kind of taking in how Trump is actually going to have an impact into the US economy. So just be mindful of your trades because there's going to be heightened volatility for the rest of this week. All right. With that,